Good morning, everybody. Welcome to 10 Figure Business Mastery live webinar Wednesday. Good to see everybody on the call here today, wherever you're coming in from, if you're from YouTube or if you're from our Facebook page. Welcome and good morning. Happy Wednesday to you. Excited to be with you today. We're going to get right into it, and we're not going to take long on this conversation. Most likely we'll get done before 10:30 Eastern Time. And we want to continue this conversation about financial mastery, right, and financial literacy. Okay, so let's get started with this thing. This is me, Cheston Bolton with By the Books Consulting, and this is how you reach me. 888-4BTB now. Go to the website at bythebooksconsultants.com or at youraccountingsuperhero.com. And this is my email. And these are the things we do. And a quick disclaimer before we get started. Following is for educational purposes only and is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, or legal professional for specific advice. And as always, we want your feedback. What do you want to know? If you want to bring something specifically to this conversation, you may be having some challenges inside of what you're doing in your business. You may not have found that solution yet. It could be in the area of just financial mastery, what we're talking about today. And you're not really understanding how to read the numbers in your business. It could be about your tax situation. You want to make sure you're saving more money in taxes, or you really just don't get it. Could be something inside of operations. Maybe your systems are not working properly, and you want to really understand what it takes to make sure you're putting the systems in place to grow your business in the way that you want to grow it. You can leave me a message, and we'll bring that to this conversation. We'll talk specifically about those things so that you can get value out of the conversations we have here each week. And you can do that by sending me an email, cheston@bythebooksconsultants.com, or you can send me a message on IG or LinkedIn at Your Accounting Superhero. All right, 10-figure business mastery. All right, so the intention here is to take your business to whatever levels you want to take it to without restriction or limitation. This is a paradigm shift. A lot of the times, people can get taken out by the terminology here as far as 10-figure business mastery. If you've never even imagined that to be the case for your business, I'm just trying to have my business survive. I just want it to work. I want to be able to just pay my bills and live my life. 10 figures, man, I don't even know what that looks like. That's okay. The idea here is to make sure that we remove whatever limiting mindsets you have, which is one of the founding tenets we have, one of those 4 pillars that we stand on inside of what we do here, right? We want to remove those mindsets to say, okay, well, what is it that I really want to create here inside of my business? And how do I go about creating that step by step, methodically out here in reality? Now, wherever you are in your journey with your entrepreneurship journey, with your business, there is a place where you want to take it so that it's going to deliver the outcome you really desire in your life. For as far as creating maybe a legacy, getting more freedom, start developing even more wealth, being wealth conscious inside of your business. A lot of us get into business because we want to be on, we call the right side of the quadrant, to make sure that the business creates wealth and legacy for us. And if you're here in this conversation, if you're in this group, mastermind group, then you really are gravitating toward those things to help you accomplish more inside of what you're doing in life. Not just do this thing on a mediocre level, but you want to do this to a large degree, on a high level. All right, so that's what these conversations are about, to give you practical tools and tactics and tips, even the mindsets and some of the experiences that you might not have had on your own, so that you can actually level up inside of what you're doing. So that's the intention of the group and these webinars. All right, so these are the tenets that we stand on. 1 is intentionality, which we call mindset mastery. 2, financial mastery. 3, structures, which is system mastery. 4 is actions or execution mastery. We have all these things in place, and there's certainty inside of how you're going to win these games. So we want to make sure we're focused on all of these and making them work in tandem, like together with how we're moving forward in business and in life. All right, so we've been driving this thing forward in 2023. We started out talking a lot about structures, and we're doing a little bit of a pivot here. Last week we started talking about finances and specifically cash flow. Okay, we got the definition here of cash flow last week, and just a quick overview and a review of this. The textbook definitions of this may not give you any more access than what you had before. You can look at these things and say, well, what does that really mean for me? What is cash flow really? We have this generalized conception of cash flow a lot of the times. It could be the case. And it's not really hitting home as far as, what that really translates to when I'm operating my business. And to be clear and distinct with it, cash flow is the lifeblood of your business. It is critical. It is super important. Without it, your business dies. And that's just the bottom line. So if there's anything to master inside of how your business is going to operate, you want to master this thing. This is the healthy underlying component of your business. And how do you make sure that you're always going to be healthy in business now and in the future forever? Okay, you want to really understand the things that impact cash flow, how to keep it healthy, how to keep it moving forward in the right direction, and how to stop things from getting in the way of that being the case. So, yeah, knowledge can be power inside of a situation, but it really comes down to application and execution of the information we have. So much information out here today. We're in the information age, technology age, and there's so much out there, but really, how does it relate to what you're doing each and every day? This is what we want to understand. Okay. We talked about cash flow from operating last week. We went over all three as far as an overview, but we talked specifically about cash flow from operating. So it's not necessarily at face value. We have profitability in our business, and profitability is not the same thing as cash flow. This is the thing that we want to be left with from the conversation we had last week. Profitability is not the same thing as having healthy cash flow. You can be profitable and have poor cash flow if we don't understand how the dynamics of it inside of your business. Just real quick, for example, we talked about invoices and accounts receivable and then accounts payable, and there's a delayed impact on these things, and there's a positive and a negative impact depending on which side of the table you're on. For example, if I had accounts payable, this is what we talked about before. Let's go and skip over this real quick, guys. So we have accounts receivable, rather. We talked about that before, and it has a negative impact on our cash flow. We do jobs, we provide services, and we don't get paid for that right now. That we take a hit cash flow wise, and we want to understand the impact of that. And we want to have systems and structures in place so that we can weather the storm of those upfront hits to cash flow from jobs that we do now that we don't get paid for. And sometimes it looks like having it on the other side of that is accounts payable. You have vendors that will extend credit for the services they provide to you, and that will allow you to withstand a lot of the downside impact of extending credit to your customers on accounts receivable. All right, and then we want to understand things like depreciation and how they actually have a positive impact to cash flow, even though they have a negative impact to profitability. And then the prepaid expenses, downside to a negative impact to cash flow, and liabilities and everything. How do they impact that as well? Like current liabilities in this term and in this space for as far as cash flow from operating, we're talking about credit lines of credit. These things we use to bridge the gap in the cash that we have available to manage our operating, and how we extend credit to our clients in terms of accounts receivable. Okay. Now, a really good strategy for lines of credit is to make sure that we're able to use those for things that are directly going to bring us back revenue. That's going to increase our cash in the future. That would be the structure for that. And we talked a little bit about taxes and how they impact it. The taxes, really the outlay of cash. Sometimes they're accrued taxes. They don't have an impact on cash itself today, even though we have the expense, it's accrued. And then later on, if we do pay these things, then it has a negative impact to cash. Okay. Now, if we master this, we can move on to the next thing. We understand, if I'm doing cash flow from operating and I'm really doing a really, really good job here, I understand the components of this thing and I'm working this day to day. Well, when is it that I can do something called investing? And what are the impacts of cash flow, or impacts on cash flow, rather, from investing activities in business? So typically when we think about investing activities, we think about buying real estate, we think about investing in stocks or bonds or equities in the market, or um, you might invest in another company so that you can get a return on what it is that you're investing. Um, some people may invest in gambling. you know, they're really good poker players, or they have a real good strategy in gambling. But we usually think about investing in terms of, I'm going to put my money out here and I'm going to get a return on this investment. And this is distinct. Inside of business, it's distinct from the typical idea behind investing activities. So, investing activities in business means that I'm either purchasing assets or selling them off. I purchase assets or I sell them off. All right, this is investing in business. Now, we talk about capital expenditures. Capital expenditures and capital liquidation. This is the thing that we're looking at. We talk about cash flow from investing. For example, if I'm buying an piece of equipment, it's going to take some cash to do that. A lot of times, it's going to take a heavy investment or outlay of that cash in order to acquire that asset. Right? It's a negative impact to our cash. And then, conversely, like later on, if we sell that asset off, we can look for the positive impact on cash later on. It won't have the same impact, like it won't balance out the impact that we had up front for the cash outlay, but we invest in these things up front because we expect that this is going to give us a return on the investment of that cash outlay for that capital expenditure. Right? We transfer our cash into this asset, and this asset wants to produce more cash. This is the idea. Now, if we do not have this basic understanding of it, and then have a meticulous process by which we approach this thing, so that we know when we're going to have these capital expenditures and this cash outlay for investing in assets for our business, then you could be setting yourself up for disaster if we don't have these clear processes and this clear understanding of what the impacts are on cash flow from just investing in assets. And I totally get that in the beginning, like if we're starting out a business or if we're growing our business, we want to grow it in a way where we can purchase the assets, like especially if you're an asset-based company, and you want to purchase these assets so that you can expand and meet capacity demands for the customers, and that's fantastic. That's something that you want to do. At the same time, you actually want to look and see what is the real impact, so that I'm growing in a way that's safe and I can sustain the growth, and I can continue to have this healthy cash flow inside of my company as I grow. So when is it that I'm going to say no to these opportunities, and when is it that I'm going to say yes to these opportunities to expand my business? Right? Well, we want to see the impact of it clearly, right? So if I'm going to buy assets, there is a consideration for how much is going to impact my cash, especially if you're in a situation where your cash flow is not working properly to begin with, and then you want to extend out more cash to purchase an asset. It tends to strain, put more strain on the cash position than you really want to put on the cash position. The prudent thing, the ideal thing would be to master the cash flow as is, so that you don't have the strains from like basic operating or financing activities, so that you are really clear on the healthy growth of your cash flow in your business before putting another heavy strain on your business in terms of investing in more assets. Hopefully that makes sense, right? Because a lot of times what I see is people just go out there and buy more equipment and buy more things because they say, look, I just want to hire some more people. I want to grow fast. And the energy is fantastic. It's great. It's wonderful. And we really want to know how and when are the moments to do this. Clearly, so it's not going to hurt us in the long run or put a heavy strain on the business to cause it to be at risk of failure. Okay, so let's take a look at something. I want to share something with you real quick. Let's go over in a quick example. I'm going to do this, and we're going to actually wrap this call up. I think that we're going to do this because this concept really is something that you want to sit with and digest, so that you really understand the impact. This is why this call is not going to be that long. All right, it's going to actually go through a scenario with you so that you get the impact. All right, so let's just take a look. Quick scenario, okay? And if you guys can just let me know in the chat if you can see my screen. I'm just going to go over this because I am sharing this thing now. Okay. Just going to make sure that you can visually see this thing. There we go. Now you can see. Okay, here's a quick example. Let's say you're going to buy some equipment for $100,000. It's going to take $100,000 to get this new asset on the books. And you expect that this asset is going to generate you about $6,200 a week gross on average. And this is the assumption that you have a trucking company. This is when we talk about driver costs. This is assuming that this is a trucking company and we're buying a piece of equipment that's $100,000. So let's say your driver cost is going to be $1,800 a week out of that $6,200, and then your fuel cost would be about $2,250 a week, which is pretty much in between, like right in the middle of what you would pay. And then let's say you prorate your maintenance costs. Means that you're not really spending maintenance costs on it right away, but you're going to prorate this at a rate of $540 a week. So you're going to have a reserve built up for your maintenance costs. About 18 cents a mile is basically what you're doing to prorate that. This means that your weekly gross profit will be $1,610. All right. And hopefully you guys are with me so far. All right. That's what you have before anything else, right? Gross profit wise. That's what you get to keep. Which means that your monthly gross profit would be fantastic. It's 69. I'm in the positive, I'm in the black. 69.70. And we know that even though we have this expected gross profit monthly of $6,970, we know that business has its sways. There's like sometimes it just doesn't go how we want it to go. In a perfect world, we know that we can produce this 69.70, but we know that the world is not perfect. So we want to put in a margin of safety to make sure we understand exactly what it is that we are realistically going to get from our operating. And typically a good margin of safety is like we want to reduce that gross profit by 33%. And then we can expect, that to be a $2,300 cost of a margin of safety rather. And we can expect our gross profit to be realistically around $4,700 gross profit from this new asset that we purchased in a month. Fantastic. We're still in the black, right? Then we can say we're going to have some increased operating costs, like its registration is going to cost us somewhere around $2,500 a year for the vehicles, more or less, depending on where you are in the country. Then you have like insurance costs. I mean, this thing can be it can be up there. It could be more than this, like the $1,200 a month range. It could be more, depending on where you are in the country, depending on the nature of your company and your drivers. All right, but the insurance costs could be somewhere around $1,200 a month, more or less. That's probably on the low end. And taxes, talking about how we use 2290s and everything for a trucking industry, about $46 a month, and then some other expenses monthly around $500 a month. So with this format, you can say, okay, my net profit increased from buying this asset to $2,716 a month. That is great. That's positive, man. I got some more cash coming in, $2,700. That's great. Now we got to think about it. You just dished out $100,000 to gain back monthly $2,700, right? Which is great. Like it's ROI wise, you're somewhere around, what is that, on 100,000, and your net profit is $2,716 a month. So $2,716 times 12, that's going to be 32,592 a year. So that's like 32% return on investment. That looks good, right? That's a really solid investment, 32%. Where else can you go and get a 32% return on your investment year after year, right? It'll take you 3 years to recoup that investment. but it's also to recoup the cash outlay. All right. So that's actually the time frame it would take you to recoup that cash outlay, 37 months. So there's a difference between return on investment, which is great, but then return on recouping the cash is 37 months as well, 3 years. Now, what does that do for your business? It says, well, can I weather 36 months of this impact of cash on my business? I just use that much. Really, that means I just use this much time of cash right now to get this investment and get this asset on the books so that it can return me this money over time. And typically we want to look at, well, the nature of the asset means that it's going to give me a certain amount of time of use anyway, utility anyway. So what is that really going to give me in terms of positive cash flow and real return on investment? Right? We got to take a look at that clearly, at what it does. Okay. Now, we're bringing this to the conversation because a lot of times we don't get how much of a strain that these decisions we make put on the business. You could be thinking, well, I'm just going to borrow the money. I'm going to borrow the money to actually to buy this equipment. Great. And then you have, the monthly outlay and the financing cost, which reduced that 27.16 a month by whatever the financing costs are for that piece of equipment. If you're looking at $100,000 piece of equipment, it could take that down considerably. It could be around $2,000 a month for the financing of that truck or that piece of equipment rather. And that leaves you with 700 or at least less than 1,000 of increased profitability. And this is also the thing we want to take into consideration is the fact that if my cash flow from operating is optimal, this is considering that your cash flow from operating is optimal already, that this would have a negative impact on that cash situation. If you're underperforming from cash flow from operating, you're not really managing that properly, this could have devastating ramifications inside of what you're doing. So, but if you did do the financing, that still impacts your cash. It's not making the situation any better, is what I want to say. Right? It'll still take that amount of time to recoup everything that you put into it. So you got to think about the number. Like I want to be able to recoup my cash. Let's say I want to recoup my cash in investment or outlay within a specific period of time, or at least, I want to save up cash to invest into this. Maybe I'll save up 36 months worth of cash, and it's not going to impact me so much. Right. But you want to actually look at the months to recoup your cash as an indicator of, how much of a cash outlay you'd have to have for an investment. And that would be the negative impact of it that you want to really consider inside of your operating. Okay. Take into account this, you can manipulate your decisions. Well, maybe I'm just going to purchase a piece of equipment for, 20,000. It's going to last me just as long if I do the maintenance. Maybe my maintenance costs will go up a little bit, but my cash flow won't be impacted so negatively. So I'm going to get some piece of equipment that's not going to cost as much of a heavy outlay in cash. And that makes a whole lot of sense, which is what a lot of people do naturally. And it's naturally done that way just because it seems expensive to buy a piece of equipment. But it's not done that way because you're actually looking at the numbers to see what makes sense for you. Right? And you always want to approach it from the position of what makes sense. Well, I really want to get something that's going to, generate that 6,200 gross a week, and is only going to impact my cash flow for about maybe 8 months of negative impact to cash flow. I can withstand that because I've been doing well and performing well over the last 3 years, enough to buffer my cash position so that I can, put that into this investment. Or I've been doing such a good job from the financing activities, which means I'm able to accumulate cash in that way. So I've built up reserves in my cash, and my operating cash flow has been doing so well that I can withstand the storm of this investing activity so that I can produce more later. Right. So you want to look at all those components to make sure you're making a really good decision here for your business. So that's not going to put your cash position at an unhealthy level and be a detriment to the business overall. All right. Now, definitely want to make sure we sit with this part of our conversation here. Hoping I'm giving you something to think about that's new. You haven't thought about it this way before. A lot of times, as a business owner, you don't think about it this way. And this is the way you want to approach it, so that you're always making sound decisions. That's why it's really good, and well, not good, but it's critical, really important, super important to run your company by the books. This is why we have by the books over here, because the numbers will make sense, right? If you follow the numbers, you understand what you're doing with the numbers, the business will make sense always. All your decisions become a lot more clear, right? If I can't withstand a 37-month impact to cash, well, I might want to make a different decision, right? I might want to make a decision to buy or invest in um, a less costly asset that can do the same thing, or I might want to hold off and make sure I build up the reserve of cash before I put myself in that position to be in such a strain. Not more so than strain, but something that will actually take you under. And a lot of businesses get taken under by these decisions, and they don't even know why. But this is why. This is why you get taken under, because you don't really think it through. You don't do the numbers, and then you wonder what happened. But this is what you want to do. All right, guys, it's been great being with you this morning. This is a really good technical conversation that you want to be with. Not going to give you any more to bite off on today. This is where you want to be. All right. I'll see you next week. We'll talk about cash flow from financing, what that looks like, and how fantastic that can be. All right, guys. See you next week. Take care.